I record this video after close trade Wednesday, 12th of December 2012. It's actually the next morning here, Thursday morning in France. Finally, a little bit of excitement with FOMC announcement today, Wednesday. And then yesterday we had a little bit of a run the stops kind of melt up rally. Ended up with about 1.4, 1.5 million contracts traded on both days. Must admit I haven't been trading much over the last week. You can see the volume's been dropping off, and that's just shown by the charts have been incredibly slow and painful and just boring. So you know, in days like that it's just best to do something different. But anyway, so FOMC kind of comes out and it's a little bit different this time. So QE4 is what they're calling it. I think this article by Zero Hedge, just pull this up quickly, came out with this after the announcement yesterday, was pretty interesting, saying this time around this QE announcement everything's a little bit different, and it just shows you what happened on previous QE announcements. And this time the market kind of sold off. Previously in QEs the market has advanced. We had the VIX kind of obviously doing the opposite of what the advanced market was doing, so it's a flip picture there. And in terms of Treasury yields actually went up, and previous QE announcements yields have gone down. So what that's showing us is that I think the fact that we were going to continue with QE and the Fed were not going to stop that policy. I mean, everybody kind of anticipated that. No one was expecting anything other than that. But what was different this time was the market reaction to it, and that's going to be what's kind of key kind of going forward. Got a hat tip to Mark Farber. He had this thing right over the last 3 years. He's been saying the Fed will print money ad infinitum, and he's absolutely right. But how the market kind of deals with it, that's a different kind of story. And I don't think the full picture is going to be out. I think we're at this end of year. We're in a bit of a Christmas rally phase. There's kind of people playing games, changing asset allocations and so on. So I don't think the full pictures for me is going to be clearer and clear until the first week in January. So it's a little bit premature to be saying what's going to happen next. But we're in this stage at the moment, and one of the reasons why I've not liked trading this is we're in a little bit of a melt-up rally stage at the moment. The pullback level came in on the daily chart. We started to break down, and then it just refused to kind of go anywhere. We've been hanging around this level and just kind of moved up, and there's always a risk when the pullback or any kind of breakout level, for example this one, doesn't immediately work out, that you'll have some kind of spike in the other direction. This one turns into a full-blown kind of rally phase, but because we're after these kind of peaks, I would suggest that what we're going to do is maybe just have a bit of a spike and then get some kind of continuation on the downside. I've still got a bearish view, having had this topping out view with exhaustion buying and so on, and it's just playing into this kind of Christmas rally and asset allocation kind of turn at the moment. I'll show you a couple of more kind of reasons for that, though. Better X trend just on the daily chart on the E-mini has kept us right over the last couple of weeks. We did break into this uptrend. We've not trailed up the stop yet. We've not seen one of those exhaustion buying bars. I would have thought with yesterday's activity, with Tuesday's activity, it was such a kind of melt-up type day. The average trade size was extremely high, and I'll get to that chart in a minute, but it didn't end up being like an exhaustion pattern here. So that stop has not been trailed up because that exhaustion pattern hasn't come in yet. But on the weekly chart, just bear in mind, we're underneath this weekly resistance level, so we're kind of being battered backwards and forwards a little bit. We've got a short-term rally going on, but a potential longer-term downtrend. And it's just interesting to me that NASDAQ chart's extremely weak. NASDAQ chart, we have not reversed into an uptrend here. You can see trailing stop kind of got rejected at this point here, got rejected again over the last couple of days. This one's being driven heavily by the Apple chart, so whatever happens to Apple, if Apple kind of bottoms out and puts in a pullback to end of trend over the last couple of days and has next couple of days and has a rally, we might well kind of poke through there. But again, we're coming into this kind of Christmas period. Directionally, the direction will be set in the first week in January, not in kind of the couple of days leading up to Christmas. So I'm just being wary of that kind of timing. In terms of trend oscillator turned a week or so ago, has been running up. We've reached about 132 on the oscillator, so getting to an overbought kind of stage could easily kind of flip over, take profits on that long trade and kind of head into a down swing. It's interesting, if it does kind of flip over with today's activity, this will be kind of a bit of a bearish divergence, price versus the oscillator, so that could mean a stronger move kind of to the downside. And then on the long-term charts, finally on the 40,500 tip bar chart, we had this exhaustion pattern. So we had this bottoming out weeks ago with exhaustion patterns. Then we had moving into this pullback to end of trend. It was a flush pattern, selling out, flushing out the last of the sellers at this point, and we've rallied since there. And then, so this is the first time that we've actually seen an exhaustion pattern that mirrors the exhaustion pattern that kind of bottomed this move out, and it came with a whole bunch of blue professional bars. This is Tuesday's activity where we ran all those stops. Extremely high average trade size on that day, and yesterday as well. I'll show you that chart. We've had our bearish divergence, probably going to make pullback to end of trend on this time frame, so I just think it's just going to spend a little bit of time kind of topping out over the next couple of days rather than moving swiftly into a downtrend. I'd have thought we got to go through that topping out process first, because again, people are trying to figure out, what does this additional QE mean? To date, it's been stronger stock prices, but does this time around does it have a different kind of character, and people are going to view it differently? This is the average trade size chart, and that's what happened over Tuesday, Wednesday. We had very high average trade sizes on both of those days, and just watch out for those, because they do tend to signal where the professionals are active at kind of pivot turning points here. And to have two in a row like that, relatively unusual. This is kind of comes to mind the last time we had there. But remember, the professionals are always early. These things don't turn on a dime. Even after we had that pattern, we had some testing amateur kind of activity, kind of testing the highs before it kind of rolled around and kind of went the other way. And then just to talk about, I just had a video up a few days ago about the dollar index, and just thought, I was calling this a bit of a launch pad after this activity here this particular day, and this was a cyclical support kind of area that had come in after pullback to dirty end of trend, exhaustion patterns, first bullish divergence, and then a couple to three flush patterns, flushing out the last of those sellers. And then with yesterday's activity, we had this really interesting kind of down bar. First of all, leading into that, the Monday, Tuesday, we had amateur down bars. These are testing down bars. So the direction of those is interesting, because that's just kind of testing down. The amateurs kind of get wrong-footed here. The professionals are interested in kind of picking up in this band, in this acquisition band, and they didn't. They let it spike down. Why not? Take the opportunity and then buy it back. So it's above kind of this support level here. And we're kind of messing around with this. A break above 81 or so will take us into a strong uptrend. And just be careful, just because the charts are what's important. The charts tell you what's going on. The commentary around this QE stuff will just, everybody's talking about destroying the dollar. Peter Schiff's destroying the dollar. Jim Rickards, talking about currency wars and how the Fed wants to destroy the dollar and so on. Just, at the end of the day, the chart is what matters. And, the opinions have to be backed up by the facts. And I look at this and I just think, well, let's, jury's out. We didn't get the support line broken. We didn't break into a strong downtrend. The professionals didn't sell this down. It wasn't a blue professional down bar. Closed on the lows, and it looked like we're heading to test these, break through these lows to new lows. That's not what happened yesterday. We had this kind of reversal bar. They kind of brought it back up, and a break back above 81. That will show that the dollar is going up. So, we're still trying to figure out which way to go. And it's the same picture with gold and silver. Just to show you the euro chart again. The euro chart trying to break back up. This 31 level is very key. Triple tops are kind of okay. Quadruple tops don't usually work out. Quadruple tops, usually mean that we're just going through that resistance level. So we'll wait and see. It was kind of being led by the amateurs. We kind of had amateur up bars. I suppose yesterday's strength did catch me by surprise, and particularly because the dollar index was going up. That the euro didn't kind of sell off more than that. It kind of closed at the top of range, was a little bit surprising, but the Japanese yen got destroyed yesterday, and so that's one of the other kind of large components of the dollar index. But look at this. This is gold and silver, and been talking about this. So this is this kind of point where we've come up to a flush. We've been in a little bit of a quandary here. We've got amateur up bars, amateur down bars, so a little bit of consolidation here, marked by the amateurs at the highs and the lows here. And with yesterday's activity, this morning's activity, we're coming down through the lows there on the silver chart. And you look at gold, same thing. So amateur up bar was an amateur down bar here. So it's kind of marking this kind of territory where the amateurs are driving the activities. So we're waiting for kind of a confirmation. We're coming down through 1700 here. This is the critical point here, and this support level at this point here. All of a sudden, that's we start to break through those lows, 1675, something like that. then kind of gold's going lower. And everybody's story about, again, just look at the chart. I know the gold bugs want this thing to go up. I know QE suggests that it should, but gold tends to go up because of political uncertainty. And if the US dollar is strengthening, gold and silver will go down. So I'm kind of waiting to the first week in January and just waiting for kind of resolution on these charts, because they're in a little bit of consolidation. But don't necessarily kind of buy into what the media is saying. Just look at the charts to figure out which way the thing's going. But for me, this is showing topping out, a little bit of consolidation, and breaking through those lows will be confirmation that we're into a downtrend. Bond charts next. What was interesting about the bond chart, I don't think we're going into a major downtrend in the bonds, but the yields definitely kind of went up yesterday, and we've had this kind of temporarily kind of topping out type pattern in the bond charts on the daily and the weekly charts. And just show you those. This is 30-year bonds. Over the last couple of days we went pull back to end of trend, and that's led to this kind of sell-off over the last couple of days. This is the 5-year. The 5-year has been stronger than the rest, but again, just look at this. We've got exhaustion buying and bearish divergence kind of come in here. A little bit of a pretty extreme kind of exhaustion buying at this point here. And then the 10-year, same thing, exhaustion buying, bearish divergence kind of comes in double top, and then we're kind of selling it down. I don't think this is going to go a long way. I don't think we're breaking into a major downtrend, but we could just see some rates kind of rising temporarily, and we could have a little bit of a weakness in the bond market. If you look at the weekly charts here, so on the 30-year weekly chart, we've had over this year we've been playing out a pullback to end of trend move. All these blue professional bars kind of come in here with exhaustion buying and so on. And the last move that we had blue professional up bars kind of taking profits into those highs up there. So as this swings around on the weekly chart, we'll get weakness on the bonds kind of coming in here. And so temporarily, for the time being at least, looks like we might have found a little bit of a top in bonds. 5-year. This 5-year has been the strongest chart of the lot. But you can see here blue professional up bars with exhaustion patterns here. It's been hanging around above the resistance level here. The 10-year's been showing similar to the 30-year, pullback to end of trend, exhaustion buying, bearish divergence kind of coming in. We had Rambo patterns, Rambo testing up here, blue professional up bar, and then we got this cyclical turn that'll come off, show this week and so on. So that's an important kind of turning point in bond markets over the last that's been playing out over the last couple of weeks. And with yesterday's announcement with FOMC, it's interesting that that's kind of played itself out for the time being. So there we go. That's kind of the bigger picture, longer term charts kind of playing themselves out. Meanwhile, the short term charts, the day trading charts, we've had some really nice setups when we've had some decent volatility and volume kind of going on. This is Tuesday's activity, where we had this kind of melt up rally. Started off beginning of the day, we had all these blue professional bars, and you could see it was just creeping up and up and up. Market doesn't like flat tops like this, and as soon as we broke through this resistance line, we're into an uptrend, pullback to end of trend. Topped out nicely, exhaustion pattern, bearish divergence kind of comes in. We had this extreme blow off activity up to about 28 or something like that, and then we tested back up with amateur up bars here. I wasn't trading that day just because I could see this happening, and just anybody who's followed the site just knows days like this, these kind of melt up days, I absolutely hate. And sometimes I'm able to get my head around them and realize that I should just jump on board and just follow it, but wasn't for me yesterday. And then we kind of bottomed out. It was a spike kind of bottom after exhaustion, selling, bullish divergence. Again, look for these first bullish and bearish divergence signals as trend changing points on the 1500 tip bar chart. Once you got kind of price confirmation kind of come in, they are good. So here we go. We got the spike reversal here, this bullish divergence. We set off. Then overnight we had exhaustion buying, bearish divergence leading into the close, and overnight pull back to end of trend, blue professional up bars here. So coming into Wednesday's activity, initially I got short at 31.50. Pulled out two points on the way down here, got very quiet, so stopped trading around here with these Rambo patterns. Then the market was just waiting for the announcement, and then we had the announcement, the usual kind of shenanigans over the announcement here, and then we had a top market kind of topped out beautifully, another pullback to end of trend, exhaustion buying, bearish divergence on the left shoulder, so the pullback level's kind of good. This little test bar up is kind of a classic. So we got amateur up bars happening here, bang bang bang. and market kind of turns around, slinks away, breaks into a downtrend, comes back, support becomes resistance, bounces off there, bang, into a downtrend, and then this thing will end up with pullback to end of trend on the way down. I was in long in this move after the announcement here, long 32.50, and got out at 36.50, which was kind of just on this pro-signal exit kind of here. That was enough for me. Wasn't watching it for the rest of the day, and then it's interesting when I saw the chart at the end of the day, and it had kind of finished off. Oh, there we go. TradeStation's just refreshing my charts. Anyway, hope your trading's going well. 32.50, long 32.50. And just had my data feed go out. It was extremely annoying. TradeStation. So it's getting interesting. 11:37. Bernanke speaking. We had initially kind of blue professional bars kind of came here, kind of sold it down, but we've had rainbow patterns down the bottom. This kind of breakout zone, we bounced off there. Amida down bar, 500 tip bar chart, then a blue bar came in, and we immediately broke the highs of that. So we're breaking above resistance here on the 500 tip bar chart, hopefully into an uptrend. So that blue professional bar hopefully is jumping the creeks. Not quite right. We need to kind of keep on coming through these highs. If we break these highs, we'll get into an uptrend. But we've got kind of the 1500 on this way and the 500 breaking up. So let's see. We go, just popped above 34. 34 was the previous high here. Had exhaustion buying, was about 7,000-8,000 on better momentum on 15, and that's kind of hopefully going to propel us through. We're into a bit of an uptrend on 500. No blue professional bars kind of taking profits yet, so see if this runs pull back to end of trend. Just looking for 36.50, so we're at 34 already. So it's moving nice and fast, which is good. A series of Amida down bars here, 500. Kind of resistance becomes support, kind of potentially bouncing from here. Here's Amida down bar. Resistance coming on the 1500. It's kind of a Rambo pattern here, so a lot of low average trade size. But assuming this is breaking above resistance into an uptrend on 500, should continue to get followed through. No blue professional bars to give us a clue. Maybe they're taking profits kind of up here after that exhaustion buying. And here we go potentially. This overnight high 35.50 is just sitting there, so we're just underneath it. There's going to be stops to be run if that's the case. So blue professional bar breaking the highs of that, so potentially into a little bit of a jump in the creek. But I'm just looking for 650. But if 550 gets hit, we'll get stops run to 650. So that's, here we go, 5.25. Come on, just give a little bit of a jump through. Here we go, 550. Just out, 36.50. Blue professional bars come in, 12,000 on better momentum. That'll be another exhaustion signal, pro signal exit there. Could easily go higher, but quite happy with that. So 11:46, good Chicago time, and just set up from that blue professional bar here. So we have a little bit of initial kind of profit taking bounce off the Rambo patterns. Amida down bar, blue professional bar breaks the highs of that, bang, into that little exhaustion pattern. Excellent. There's the pro signal exit gone off. Done. Alright, not a bad day.